Welcome to Inside Wall Street. I'm Nancy Lanzendörfer, and today I'm proud to have here Rambo. Rambo of the capital markets, the head of Wyser-Pratte & Co., an investment fund with some $500 million in asset under management. The legendary U.S. investor Guy Wyser-Pratte, thanks for having you today.
It's a pleasure to be here.
Guy, how would you describe yourself? I said Rambo of the capital markets. How would you describe yourself?
No, I mean, I'm a shareholder activist, and people have sensationalized that into all kinds of names. I mean, Rambo is one of the kinder ones, you know. In France, they call me Schwarzkopf, you know, for General Schwarzkopf, because he unfortunately was an army general. I was in the Marine Corps. So there have been many names, but it's because of what I do, basically, which is somewhat aggressive.
So aggressive, we know you're invested in the German company KUKA, we know about Curanum, newly in the Swiss private equity holding, we know about your interest in Lagardère. What's next?
Well, we also just invested in a small Italian company that we just went public on, which is DMT, which is Digital Media Telecommunications, which is it's near Milano. And they just made a deal with Mediaset to merge their two tower businesses, the communications towers. So before they did that, we wanted to make sure that they were going to do something to maximize shareholder value. So we knocked on the door and we said, here we are. And when we do that, usually that focuses the mind pretty quickly.
What's important for you when you look to buy shares?
Well, that there be an undervaluation. I think that's the key criterion for our involvement in a situation, is that there be a large discount and that we can do something about it. That's the two main things.
What company or stock is fulfilling these criteria? Give us some examples.
Well, I've done this since 1990, 80 times, 80, okay? So we've done this a lot everywhere, States, in Europe. I even went as far east in Europe as Slovakia in doing this. And so we've had some very successful ones and some not so successful ones. I mean, the successful ones were like Tétinger in France, Strafort Facom, Ingenico, in Germany, Rheinmetall, also Mannesmann. We were involved in the shareholders meeting in that. And some not so successful ones were things like Babcock Borsig, which was a real situation which was already bankrupt when we bought into it, and we spent a lot of time in German courts trying to get satisfaction. Never could happen. So the ones we're in now, I think, are going to be okay in Germany. With KUKA, where I'm on the board, so I have to be careful what I say, but KUKA has been in a complete turnaround situation. And they're changing their markets to become more concentrated on industrial robots rather than automotive robots. And I think they're going to succeed in a very significant way here and be one of the major robotics companies in the world.
Is this your favorite stock at the moment?
Yes.
Yes.
Yeah, I've been in it, 8 years. So anybody who says I'm a short-term investor had really got to think about what that means, that I've been in situation 8 years, and I've been there through 3 different managements, trying always to help them to focus, to get away from strict adherence or dependency on the automotive sector, because it's too volatile. The money is made in robotics nowadays in industrial robots and in special purpose robots, medical robots. You're going to see KUKA developing a lot in the medical robots field. So I'm very, very confident about what's going on here at KUKA.
When we speak about Germany, what do you think about the merger or not merger with the NYSE Euronext and the Deutsche Boerse? Nasdaq is now saying they want to merge with the NYSE, they want to buy it. What do you think about that?
Well, I'm a little skeptical about it. I've been involved in finance since 1966. I've watched what's happened to all the major stock exchanges around the world. I've trained in Brussels, in Paris, in Amsterdam, Frankfurt, and all these exchange trading floors, all you see now are big stands with dogs running across the floor and no more people. And that's what's going to happen here at the New York Stock Exchange, because they have taken away the incentive for specialists to be able to earn a living and therefore to maintain markets in the shares that they represent. That's no longer the case, so that the profitability and so on of the stock exchange became such that it became a target for Deutsche Boerse. So, it's a sad day when the symbol of American capitalism is about to disappear into another company. It's been happening to many companies here in the United States in the financial sector. And that it happens to the symbol of capitalism around the world, where you had the only remaining auction market, and the regulators here have destroyed it, basically. It's a terrible shame.
What solution would you prefer now?
That they allow the specialists to once again earn a decent living on being able to trade the shares. Therefore, they would come back in, they would be market makers, and when you wouldn't have all the volatility that you have. The stock exchange now has become a sort of a casino, because who dominates? The big trading firms who do their high-frequency trading and their program trading. This doesn't serve the public. This serves their own balance sheets. The public doesn't benefit at all from this kind of activity. In fact, it causes a lot of volatility and loss of confidence on the public on the part of what's going on in the markets.
So you know the market here and in Europe, for example. What advantages do you see in European or especially German companies you're invested in compared with US stocks, for example?
From what point of view, as far as comparing?
Where you're invested.
Yeah.
You're more invested in European stocks
Yes.
than in US stocks. Why?
Yes. Because I think there are more opportunities in Europe. There are more discounts as against net asset value. There are exists less of a litigious atmosphere in Europe than there does in the United States. In America we have more lawyers than citizens. So it's a very litigious society. Everybody sues everybody, and that's how everybody lives. But that's not the case in Europe. There's a different code in the culture that doesn't permit that kind of thing. And you have more voting restrictions in Europe, and you have more, I would call it, contrivances, like double voting rights, preferred voting rights, golden shares, voting ceilings on the number of shares you can have in a particular company. The OECD made a study several years ago and pointed out that of all the companies listed in Europe, 65% had a 1 share equals 1 vote.
Okay.
Not so good. That means that 35% of the companies don't have 1 share equals 1 vote. Well, that's horrifying. Yeah. But that creates the opportunity.
What should potential investors we be looking at within the markets going forward?
I think you're going to have a lot of takeover activity in the markets. You're seeing it now. It's because corporations have done better than the governments. The governments are a mess. You have weak leadership all over the Western world. And Japan, too, has weak leadership, for that matter. So what's happened is that the corporations, which have very good leaders, have straightened out their balance sheets and are in a position to make acquisitions which will prop up the markets to a certain extent. If only the politicians had the kind of character that the American and foreign business leaders have, you'd see a different story here.
Last but not least, what's your opinion of the stock market in the next weeks? The volume is very low at the moment.
It's low because you're in a period of, I think, uncertainty. You have a lot of things going on in the world. You have this morning the ECB raised the interest rate a little bit. You have a standstill in the U.S. Congress about coming to a budget resolution. You have the elections coming up. So there's got to be a lot of second-guessing as to what's going on, and people, are a little bit reluctant to place their bets. But there's too much money sitting on the sidelines still. And I think that's going to have to move into the markets and out, certainly, of the bond markets, because we're working ourselves into a Weimar situation here. We're inflating the currency. That's what the Federal Reserve is doing. And I think they're mad, myself. And I think that as a result of that, that's why the dollar has gone down so far.
So you think the market is going higher?
The market is go higher. The French call it an hausse de misère, which was an uplift based on misery. And that's what's going on here. You don't have very many choices. So people are putting their money into high dividend paying stocks, ETFs, which pay a nice return, and are pulling it slowly but surely out of the bond market, which is a disaster waiting to happen.
So, and you invested, we have spoken about your investments. Last question, what are you looking for at the moment?
You want my secret positions? Well, we're always looking at things. You know, we're currently looking. We have one that we did in Switzerland, which is the private equity. I'm looking at another one in Switzerland. We're trying to figure out what to do with Lagardère because I had a big fight with them last year, and something happened with the vote. There was a big article in Libération last week, which said that a lot of votes that were meant for me didn't get there. So who did what? Why didn't those votes get there? So we're trying to figure out what to do, because if it turns out that somebody fooled around and prevented the votes from coming into my corner, it would have meant that I would have won the vote and I would have been on the board of Lagardère and able to do a lot of things for the company. And if it turns out that that's the case, we may ask for the meeting to be annulled from last year. So I have my eye very carefully on this one.
Guy Wyser-Pratte, thanks for having you today. Thanks for the interview.
Nancy, my pleasure.
And thanks for watching, ladies and gentlemen. This was Inside Wall Street. See you the next time.